Hello and welcome back to Tip TV Finance with me, Matt Brown, and I'm joined today by Brian McMaster, who is the Executive Chairman of Harvest Minerals. How are you today, Brian?
Well, thanks, Matt.
Good, good. So starting off for viewers and potentially new investors, just talk us through what Harvest Minerals is, or your company is, and what you actually do.
Sure. Harvest Minerals is an AIM-listed company which specialises in fertiliser. We are producing a very special at-surface multi-nutrient fertiliser in Brazil. And
do you have to go drilling for this fertiliser?
No, all exploration's done, everything's done. We're actually in production. We literally, as we sit here today, the contractors are on site producing the product.
So it's there, it's good to go. Yeah. You're producing, and you mentioned you operate in Brazil. So who are you selling to? Are you exporting, or are you keeping the product in Brazil?
Yeah, the Brazilian link really is quite significant. On a global scale, everything about fertiliser shoots back to Brazil. Brazil is one of the largest importers of fertiliser in the world. It's one of the largest agronomic footprints in the world. The government of Brazil has said that fertiliser and farm production is the future for the country. So it really is one of the very few markets in the world that you need to focus on if you're in this line of work.
And what are the benefits of producing and selling in Brazil?
Well, the benefits for us in particular are our customers literally are within eyesight of where we are. So if you did a 360-degree look around from our site, you'll see our customers. We are surrounded by coffee plantations, carrot and other vegetable crops, soya beans, etc. So from our perspective, we will produce locally and sell locally, literally at the farm gate.
So that's great. So I assume you're cutting the cost of transportation, don't have to worry about that, and any import duties as well, you're circumnavigating those because you are delivering onto your doorstep.
Spot on. So the government of Brazil have publicly come out and said that they want the country to be fertiliser dependent by 2020. Now that's not really going to happen, I don't think, but what it does speak to is the importance of fertiliser for the country. The country is one of the 2 or 3 largest importers of fertiliser in the world. Import duties are a major impost on farmers, and we eliminate all of those costs. So we produce an organic product that's local, meets the government's requirements, and costs the farmer less.
And with regards to, that will certainly help the margins. What kind of margins are you looking at?
Well, we've publicly announced that we signed an LOI with a major coffee producer at the end of last year, and the price is around about $63 a tonne. It's denominated in Brazilian reais, but when you translate it, it's about $63 a tonne. We know, because we're actually producing right now, our all-in costs run at about $7 a tonne. So that gives us a profit margin of, $55 a tonne plus. And based on our current capex, the amount of money we've already spent, so no further money spent, we could produce up to 400,000 tonnes per annum. Now that readily equates out to about $20 million in free cash a year.
And you mentioned capex. If you look to expand the operation and increase capital expenditure, where will those funds come from? Will they come from a share placing or raising, or where will you actually tap into those funds to do that?
Well, at the moment we'd be self-generating, because in order to expand this current project, the capex would run in the hundreds of thousands of dollars. It's just, really is not a lot of money. So if we start to generate this sort of cash flow, we'd be able to fund any capex expansion of our own. In addition to this project, we also have 2 more traditional potash assets which sit either side of Brazil's only producing potash mine. The capex around developing those is much more substantial, but so too would be the payoff. So something for the future will be, once we've bedded down the project we're working on, will be to roll on into those new projects.
Fantastic. That's positive news for shareholders as well.
Oh, absolutely. I mean, the life of mine on this highly profitable thing runs for many, many years. The life of mine on the traditional potash assets, if we brought them into production, would run for decades. So, in terms of being a major producer of fertiliser in a country that's desperately screaming out for fertiliser, we are, the only AIM-listed guys who fit that bill.
And Brazil seems to have turned a corner. It's had a few bumpy years, let's say, but it seems over the past few years, I think numbers out, last month showed the biggest growth in 7 years. So certainly having that market on your doorstep is a positive. And do you see more growth now in Brazil?
Yeah, absolutely. We've been in Brazil in different guises for a long time, and we've seen the country sort of a little bit up and a little bit down. It is a massive economy. People sort of don't really focus hard enough to realise there's 220 million people in Brazil. It's quite nationalistic, so it likes to keep things within its own borders. And there is a lot of third-party evidence in the market right now saying that Brazil is one of the go-to countries for 2017 and 2018 if you want to ride a bit of an uplift curve.
Fantastic. And research reports of late have shown your share price or price target should be a lot higher. Do you, I mean, obviously you're going to agree with that, but do you feel there is a lot more kind of value in this company that maybe shareholders haven't realised at this stage?
Yeah, that's right. I mean, there's 4 research reports out which are all available on our website, and they indicate that we have a share price expectation of between 30 and 40p, which is, sort of 3 to 4 times where we are at the moment in broad terms. We've come down considerably from some highs of late 2016, and I think, a little bit unjustifiably. The market, my observation is getting a little bit bored with the fact that some of these things are taking a little bit of time, but the reality is things take a little bit of time. I mean, we've brought a mine into production. Now we have to consolidate that work and sell the product, etc. The growing season in the Southern Hemisphere starts in September, so the people will be buying their fertilisers in the coming few months. So I expect to see that reversal, that dip in price reverse itself in the coming weeks and months.
Good stuff. So lots of positive upside. And just to finish off, over the next, as you've already mentioned it, with the growing season and everything, a harvest season in September, what else can we look forward to from Harvest Minerals over the next, let's say, 12 months?
Well, I think in the immediate term, investors should look for us to close the loop on what we're doing in terms of seeing us convert some of these production to revenue. I think that's the one big thing everybody's waiting for us to do. And, as I have said previously, we anticipate that will happen imminently. Following from that, there are lots of really interesting things happening around the place. There's some potential acquisitions that we can look at, and the other projects that we already own that may need to spend some time and money developing those, all of which is very, very positive, and all of which, we really think the future is quite bright for Harvest.
So potentially lots of upside for you, Brian.
Well, we hope so, and we certainly, we wake up every day and put our shoes on with a positive frame of mind, and we're not doing it for naught. We honestly think we're on the path to something quite good here.
Fantastic. Brian McMaster from Harvest Minerals, thank you very much for joining us today.
Thank you, Matt.